Let's talk some overlooked stocks. George Tsilis with some movers for us. George, today we're stretching the definition a little bit because we're going to go back to a stock you mentioned yesterday. We're going to talk a few companies that have been a little bit more in focus than our traditional kind of overlooked smaller names. Let's go to Rocket. Let's talk mortgages first. Tom put this on our radar yesterday with an options trade that was bullish. That thing paid off like crazy. Who knows? I mean, a little bit of short squeeze perhaps, a little bit of optimism a few days after its earnings. What do you make of this giant move?
This is an interesting one, OJ. Now, Rocket Companies, and I say companies because it's not Rocket Mortgage anymore. I think this is a company that's becoming a full-fledged financial services firm, including mortgage financing, which is their traditional business. We know that they're also in real estate, auto lending, and personal finance. I really look at this company as a SoFi or SoFi Finance kind of company, primarily focused, of course, in the mortgage lending space. We know the market's hot for housing. There's no denying that. Looking at the report last week, and one thing I always mention is in a bad tape. Last week was a bad tape. Look for companies that have good earnings, and Rocket Companies came out with some fantastic numbers. Top line sales beat. They were up 140+% year over year. Just look at what they also said to the previous quarter. The previous quarter, they offered a share buyback of 1 billion shares. They IPO'd, I believe it was through a reverse merger SPAC, OJ, or IPO clean out back in August. To see them buy back shares so soon tells you something. This last quarter, if you look in the numbers as well, hidden in there is a dividend payout, which again is very unusual. It's a special dividend. It gives you an idea that management, the board of directors, is very confident in the company's prospects going forward and the financial conditions in the moment. Now, I'm not speculating that they did this to sort of flush out the short sellers who have been really on top of this stock, but I think the short sellers were clearly wrong. And I think the the Reddit crowd here, which in many regards group thinking makes sense, and they were all over this company from the standpoint of it being shorted from a 40% float standpoint. There really was no reason why to be short the stock. I mean, it started last quarter. When it comes down to the share buyback, the growth numbers, the market they're in, the markets they're growing in, as well as, again, the special dividend, that makes an investor, like myself or even institutional investors interested in that dividend only. That speaks to saying, hey, if you're short the stock, watch out. And I think that's what happened today.
All right. So a little help from some Redditors, add in some buyback action, and suddenly shorts have got nowhere to go. George, but once again, the question is, do we have any idea then how this company looks next to its real fundamental potential at $42 versus $20? I mean, this drastically changes expectations now, and are they going to be able to deliver, earnings growth of double what folks thought they would a week ago? Yeah.
Okay, so the question is, what do you do today if you're in the stock or bought some options? And I think it's a good question, something you got to point out. Yesterday, not including today's move, it was trading around 3 times sales, market cap to sales. You got $16 billion in sales last year. I'll give you an example. We talked about stocks right now in this environment that are effectively challenged. Companies like Palantir in the AI space. That is a company with only about $1 billion of sale and trading around 30 to 40 times sales. So Rocket Companies, it's not a pure technology company, but it is a finance company, and it's a high margin business. Now, yesterday's numbers are also very telling. 3 times sales, 140% top line sales growth. It should be trading higher. Today it is. Now, whether it continues going forward, if they sell off, I suggest anybody's going to take profits. But I still think there's a potential for the stock to continue to rise after maybe a pretty meaningful pullback in the next quarter or two. I don't think the refi market or even the demand for housing is going away. You also got to think about what I mentioned just a moment ago. This is not just a mortgage finance company. This is becoming a full-fledged financial services company. Consumer auto finance, who knows? Maybe they'll even pick up student loans. I don't know. But at the same time, that's another, again, avenue this company's going to. So there's all these growth avenues. There's all these current catalysts. There's also, again, the financial catalyst and the value catalyst. It wasn't trading at a very aggressive price to sales. I think this one might have some legs to continue to the upside. But again, if you see a big, 20, 30% move tomorrow, they're going to sell it to take profits, and I would too.
Okay. All right. So look, if you had, your point, George, is if you loved Rocket thinking that it took K over the next year or two, this thing could be worth, say, 40 or 50 bucks. It's there today. Don't change your, view to fit this now and, get greedy, basically. I mean, look, we've seen things like GameStop where these huge moves doubling in price does it the same thing next day, but those events, even by this market standards, are very rare. Why try and bet on something like that? Yeah, George, we got to keep going. We got to keep going, GT, because you got a few others here for us.
One more thing.
All right, hit me, George, hit me.
I think this one is going ex-dividend on the 9th of March. So this is a tricky situation because people have it who bought it for the dividend are questioning whether they should sell it or not. So this is going to be a volatile few days as they move into that dividend event. Okay, George. Good point, but you lost the victory lap on KOPN with the time, KOPN. So there it is. Let's go to your other one, George. FUBO TV, we're talking about it again. This one won't go away, George. For those that have been betting against this stock, look at the turnaround today. Yeah, so look, FUBO has been on our list. I'm not going to call it an overlooked stock. I don't think I did last time we covered it, OJ, but they did release earnings today. And here's the thing, it's we're in a tricky environment for companies that haven't established themselves. Now, FUBO, again, is establishing themselves as a streaming service really from a sports-centric approach. They do have entertainment and news, but we know there's been a catalyst as of late. We talked about, some of the cable companies and network companies like AMC Networks, Liberty Media Group, Viacom, Disney, with Hulu, Google, YouTube TV, all these streaming service platforms are really hot right now. And the media communication space has actually been on fire within this market that's been very challenged. I think FUBO has been volatile because it is a secular-centric growth name, but they did report earnings. They beat the milestone of twofold. One, $105 million in sales. So they beat the $100 million milestone. The expectations were $94 million, and they beat on estimates were, again, a loss, and that was to be expected for the company that's growing. I think a little bit of volatility in the after hours because they did denote growth in their user subscriber base of 93,000 in Q4. For the full year 2020, they were on target to hit 548,000. They did print 547,880 exactly. Now, whether that's enough for them to sell it off, perhaps, but I think maybe the full paid subscriber numbers for 2020 were just right on the margin. Maybe that's why there's some apprehension in the after hours. But, there's a lot of streaming services choices out there, but I think FUBO is interesting, OJ, because they are sports-centric first. And the second thing is they bolted on the gambling playbook. In other words, the dynamic sports betting component of their business is another area. The other thing is subscription growth is growing, but again, there may be an element of subscribers saying, hey, we may not want to pay for the ads or watch the ads, so we'll subscribe. I think what we're seeing here is just look at the numbers, 548,000, that's just starting in terms of the number of users they can get. And I think this is a very growth-centric company. It may be the next Roku. I'm not saying it's going to 10x from here, but it is a very interesting play because it doesn't face competition in the news or entertainment streaming. It's really sports centric, and I don't see another company that competes in that space. Okay. George, it seems like the market is definitely determined this is a big enough niche to afford a fairly decent market cap, even relative to some of the other streaming companies and newcomers in the space alike. Thanks, George, for the overlooked stocks. Okay. Nice work, Mr. T. We got to run.